Friends, I'm live today to analyze the May 23 SFM question paper. Friends, many students were telling me that the paper was actually tough. Yes, this time the paper was comparatively tougher than the earlier papers. But as I tell in my regular classes and in all the marathons that we did together, if the paper is tough, we have to be tougher than the paper. In my classes, I have covered almost all the tough questions. Hence, here in this question paper, despite being tough, altogether I can say that there are three questions which would have come beyond what we have taken in the class, whereas the rest are covered in different sources. So here I am going to just give you an analysis of what are the questions which actually were very tricky and were out of the box, what were the questions which are actually easy and which could be attempted provided we have done the homework properly that was given to us. So let us start with question number 1. In this, if you see in this question paper, question number 1 is compulsory, and question number 1 they have actually made it very tricky. This is a question which is normally not there in your material. It is based on the concept of buyback. We have learned the concept of buyback, but yes, suddenly when you see a question which is slightly out of the box, we feel a bit demoralized. Here the objective of this question was very simple. They are saying that they are going to buy back 20% of the shares at a premium, for which they are going to take a loan. So they want to know how much loan has to be taken, how much interest will have to be paid, etc. For which they have given the following information. So you have the market value is given, earnings per share is given, PE ratio is given. So the moment you have EPS and PE ratio, you can find out the MPS. Once you get the MPS, total market value is given, you can find out the number of shares. Like this, friends, you are actually supposed to find out the number of shares and all the other information from which you are supposed to take the amount to be utilized for the purpose of buyback. But this question was slightly tricky and slightly out of the box, since there is no direct conceptual application of a problem like this. So I would categorize this question as tough. And this being a mandatory question, definitely many of you may not have been able to do it. So 10 marks is something which was actually given intentionally so that you could not score it and you can, target the other areas. But now when I go to question number 1B, friends, this question is a very similar type question which has been done in our regular class. In the chapter of international finance, I will take it here. See, look at this question. This has come repeatedly in the exams, and that's why we have done this question in the class. Only if you see the format and everything is exactly the same, only the numbers are different. You have the spot rate, 1 month forward rate, 3 months forward rate. Here also you have exactly the same thing, and they have given a different contract size, they have given the margin, and they are asking you exactly the same thing. Do based on forward, futures and no hedging. Same type, exactly same question is done in class. So if you are a student who have attended my class, this 6 marks is guaranteed. There is no way you are going to lose out on this 6 marks. But again, 6 marks is too less for this question. It's a heavy problem. So you will need more time to crack this question. Next is a question on swaptions. It is a combination of swap and options, and it's a theory that is coming from the study material in the chapter of derivatives, friends. Alright. Next one. Question number 2A is a question on value at risk. This question I have done in my regular class. We did this in the Super 50. We did this in the one-day marathon. I'll just show you the handout. I think this is a one-day marathon. Friends, you read this question. I had mentioned this was a November 2020 question, a tough question. And we told about how the money is lying in the bank. He needs his money until Tuesday. Same question. What they had done is they have slightly redrafted it. Okay. They have given the same 4 days over here. And they say that money has become 11 crore. Earlier over here, the money was somewhere around 7 lakhs. And then they say minimum amount required in the bank is this much, etc. Minimum balance of 1,000 rupees. Alright. So like that, they have given slight changes in the question. But this question is absolutely doable once you know this question, because rest everything is exactly the same. Here they have given 99%. Down if you see 99% turns out to be 2.33, 0.9901. Here they have directly given the 99% score as 2.33. So this question is already done, and those of you who have either attended my regular class or you have done the one-day marathon, this question is doable and you could easily score 8 marks in the examination. Okay. Now I'll go to the next part. All right. Question number 2b. Friends, this question is based on the concept of two-stage dividend discount model. We have done this in the chapter of mergers while doing valuation, where I told you you are having two types of growth rates. One is called as the high growth rate and the other one is called as the stable growth rate. So we used to do step number 1, present value of high growth cash flows. Step number 2, present value of perpetual cash flows. Here they have told initially the growth rate is going to be how much percentage? 20%. Alright. Subsequently, what happens after 4 years, the growth rate starts declining linearly by 100 basis points per annum. So 20% will become 19, 19 will become 18, 18 will become 17, and thereafter it will stabilize at how much percentage? 16%. Alright. KE turns out to be how much percentage over here? It turns out to be 20%. So based on this, you are supposed to find out the present value. So value of an asset is nothing but present value of future cash flows. So friends, we have conceptually done the same thing in the class. Here numbers are slightly different, and a slight twist is that normally we do, you will have a stable growth rate of around 20%. That would be followed by maybe 16% growth rate. But here what they have done is they have a 20% growth and then they have a slight decrement in the value. That is a slight difference in this question. But apart from that, this question is absolutely doable. At least from 8 marks, scoring 5 to 6 marks is absolutely possible, even if you miss out on this linearly falling points, which is something which has been coming out of the box. Let us go to the next question now. Pay through securities, pass through certificate. Friends, this is one of the theories that is available in the chapter of securitization, already done in my one-day marathon. So those of you who have attended the one-day marathon, for them this question is absolutely doable. Let's go to the next one. Question number 3a is a question on interest rate swap. I'll show you. Yes, friends, this is the first question that we did in our regular class, interest rate swap basics. So when you see here, fixed rate is given, floating rate is given, current preferring. Here if you see, same way in this question, if you go and check, one moment. You have a floating rate, you have a fixed rate. So you have to go by the 3 steps. Interest rate differential, gain of each party, and then what were we doing? Swap. So while we do this question, the slight difference over here compared to what was done in my regular class was that the bank is arranging a 50 basis points as commission. So what will happen? The gain will be shared among 3 people, A, B and C. We have done this type of question in my Super 50, where we also gave a commission to the banker, and I believe the same type of question came in the recent MTP, which was also done along with the RTP MTP marathon. So friends, this question has been covered by us, and even if that part is not done, the rest entire thing is already done in the regular class also. So that is again a doable question, even though this paper was tricky and tough. Let's go to the next question now. Question number B. I think this is what B? 3B. Friends, 3B is a question which we have done in future hedging. We have already learned if you are long in the spot market, what are we supposed to do in the future market? We are supposed to go short on the future market. Here, this fellow is long for 24 kg of line of rice in the spot market. So what is he supposed to do in the future market? Go short. Are you clear with that part? So you should go short at what price? 68. Long at 70. So you will have a gain or a loss. Okay. Then they are saying that what will be the price if after 3 months it becomes 65. We have done same type many questions in class. Spot market, future market. Current position spot market, long at 70. Then you go short at 69. So you get a gain. You make a loss. Similarly, what happens in the future? You are selling at 68, you are longing back at 69. If that is the case, you end up making a loss again. So like this question is a format what we have done, where we have to do spot market separately and we are supposed to do the future market separately. Down they have given a separate 3 months future price. Okay. If the future price is 72, you will have a different answer. If the future price is 67, you will have a different answer. Alright. What makes an organization financially sustainable? This is a question from chapter number 1, theory, which was covered in our regular class. So that all the points that was told in the financial sustainability has to come over here, including sustainable growth rate. All right. Question number 4a is a question on bond valuation. Already done in class, friends. Value of a bond is nothing but present value of future cash flows. So you are having 8-year 7.5% bond, which is having a yield to maturity of 8.5%. All right. Maximum price of the bond is 797. So when you come down, they are asking you to find out the market price of the bond. How will you work out the market price of the bond? Present value of future cash flows. Duration, friends, we have done duration using table method also, formula method also. Volatility, what's the formula for volatility? Duration divided by 1 plus yield. And then you have to find out what should be the price, actual price, undervalued, overvalued, buy or sell. Everybody clear with this part? Next question was a tricky question out of the box. 4b. Friends, the similar type question came, if I am not wrong, in 2021 question paper. Same thing, they have brought it back over here. Here they have got 400 billion rupees with them. They can either put the money in UK or Europe. If they put in UK, they get some returns. In the end, they get the money back. If they put in Europe, also they get some money back and they, return back. They have to check which is better. UK is better or Europe is better. But since similar type of problem was not there in your study material, I would consider this question as a tough problem. Alright, so this 7 marks is again a tricky one which could not be attempted. Alright, what about 5a? Friends, dividend plan, they have given full details and they have given question mark. Exactly same type question is done in my regular class and it has been done in the 1-day marathon. I'll show you. Yes, look at this. I think the numbers are different. You had 47, 40, 48, 42. Here you have 58, 70, 60, 72. Just the numbers are different, but exactly the same type of question. I believe I have done in Super 50 also, 1-day marathon also, and in my regular classes also. Alright. This one is an atom bomb question, friends. What is the question number? Question number 5b. Okay. This question, we have done a similar type in class, but still this question is tough. I'll just show you. Yes, we had done a question with Sharpe ratio, Trenner's ratio and standard deviation. These fellows have given over here Jensen's alpha, Trenner's ratio and the actual return. So we have to solve the equation. But when you solve it in one time, you're getting one answer. You solve it in a different time, you're getting a different answer. Hence, we have to actually wait for the ICI to come up with a suggested answer to know exactly what is the approach that they are going to follow to solve this particular problem. I would categorize this question as a tough question. Let me go down now. Okay. And limited partnership, an LLP cannot be recognized for the purpose of venture capital fund. Friends, this is a theory from the Startup India. We have learned this in the theory marathon. Startup mission, Kerala startup mission is there. Similarly, there is DIPP registration is there. So there is a definition for the startup. As per the startup definition, what is the turnover criteria, etc. and whether LLP falls in that category or no is how you are supposed to answer this particular question. So it's an already covered question directly from your study material. Alright. 6a is a question on mergers. They are going to take up a company. They want a pre-merger EPS, MPS, number of shares. Friends, we have done a tougher question in class. The first question. This question we have got around 9 adjustments. If you have done these 9 adjustments, this question is only having 3. Very, very easily you can crack this question with all the concepts. Pre-merger EPS is earnings before merger divided by number of shares after merger. Post-merger EPS is earnings after merger divided by number of shares after merger. Correct. And then they are asking MPS after merger. We know the formula. Post-merger EPS into the PE ratio. Number of shares to be issued so that pre-merger and post-merger EPS will be the same. How do you do it? Exchange ratio has to be based on EPS. A very easy question. You can score 8 out of 8 in this question. Alright. Question number this one, which is this question 6b. Friends, 6b, exactly same thing is done in class. I'll show you. Look at this question. Portfolio X, portfolio Y, weight of ABC. Okay, now look at this question. Portfolio A, portfolio B. I think even the weights are same. No, weights are different. And then they are asking you calculate the weights of each stock. Exactly the same thing we have done in class. So if you have attended my regular class, this 8 marks is guaranteed. Full 8 out of 8. Last question, commodity characteristics. So it is about commodity derivatives. This was a theory that was there in your derivative chapter. At the same time, or index fund. This is an easier one. It is there in your chapter of mutual funds. And we have already done this in the theory marathon. Index fund is one of the special funds. What are other funds in the special funds category? We learned about gilt fund. So many funds we learned, friends. Equity fund, which will put only in equity. Debt fund only in debt. Index funds only in index. Then you had, many types of different funds were available, which we learned in the chapter of mutual fund. So friends, if I summarize this entire thing, I would say first question definitely not doable for many of you, who haven't done the 2021 question paper. All right. So let's keep the 10 marks out of the question. Remaining how many marks is there? 90. Out of the 90, here we are having choice. Am I right? So if I say there were 2 more questions which were tough, out of that one you will skip. So let me just take that one question which is purely out of the box. This was easy. This was done. This is easy. All right. This question of 7 marks. Even if you put this out, friends, 83 marks is fully doable. And remember one thing, when the paper is tough, they give you an easier valuation. So if you write 83 marks properly, friends, you can still score a 60 to 70 mark zone, because if an 8 mark question you do it properly, you get full 8 upon 8. So out of 83, even if you do decently well, scoring 50 to 60 becomes absolutely achievable. That is why I always kept telling in all my classes, in the exam you may have 3 outcomes. Paper may be easy, average or tough. If the paper is easy, normally students can score in the range of 60 to 80. But when the paper is average, maybe 50 to 60. Paper is tough, still you score in the range of 45 to 60, friends. And this is not what I am telling today. I am telling this based on my last 11 years of teaching experience and the feedbacks of students. So I hope this question paper analysis was useful for all of you. If yes, please subscribe to my channel, because I am uploading many more videos and I'll be solving this entire question paper very soon. So please stay tuned. Have a lovely day ahead, friends. Take care.